Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Lumchauskas. Today is the 26th of June 2018. So welcome everyone. Today's Tuesday. So I hope you're having a very good morning. So we're gonna have a quick look at the markets, what happened with them yesterday, what levels to watch out for today. But before we do that, let's quickly have a read through our risk disclaimer. So the content of this webinar does not constitute investment advice or investment recommendation and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Also, a very quick reminder of our JFD Brokers website here, where specifically if you click on JFD Research here, it will take you to our little web page, which we update on a daily basis. We throw out different trading shoutouts, technical analysis, and of course our daily reports that we produce every morning. One is in the process of being prepared right now, so yep, feel free to check us out, guys. I think you can find something useful for yourself. So, but for now, let's quickly jump into the charts. So the first one I want to look at is the Nasdaq. Now, heavy selling yesterday. We were hit by heavy selling, yep, and we can see that the index finally broke this upwards moving trend line that has been running here from the 25th of April. So this is a good bearish indication here. We also are trading here below this 21 EMA as well, so certainly you can see that this heavy selling came in yesterday due to the trade tensions between US and China, and of course we broke some key levels that I was talking about in my previous videos, so especially being this one, the 7105. So we've closed quite a while away from it, so certainly we've tested a few good areas as well, the 7010 and the 6990 area, so approximately there. So certainly we could see a bit of continuation to the downside here today, maybe even a move towards this lower side of the Bollinger Band, which is not far from the 50 EMA here, shown as the red line. Of course, do not exclude the possibility for this one to retrace a little bit back to the upside, maybe test this 7105 area and then move lower again. So for now, certainly keep a close eye on this one. It is looking quite bearish. We could, like I said, we could see a bit of a continuation to the downside. Looking at the S&P 500, certainly similar stories here. Let me just quickly get rid of a few arrows here. So we've broken this short-term upwards moving trend line that has been running also well from around the 3rd of May actually. So we've broken it to the downside. Yesterday we can see that closed just bang on the 50 EMA here. We've tested the lower side of the Bollinger Band, which also coincided with the 2700 mark. So we've tested that area, and of course like I said, the bulls managed to push it back up towards this 2717 level. For now, this is looking more bearish than bullish, to be honest, and we could potentially see a continuation to the downside. Now, certainly, if we do get something like this, and we do see another test of the 2700, keep a close eye on the 200 level here, the 200 EMA, sorry, and good area to watch. Just also one level to kind of point out as well, this one right here at around 2675. Certainly good area to watch as well. But if we get a move here, if we get a move lower below the 2700, the first one to watch is the 2675, and then of course the 200 EMA. So you can see that the 200 EMA acted as a nice area of support here in the past, and of course we could end up seeing this move again, and seeing this test again of this line. So stay sharp, guys. For us to kind of become more bullish on this one, or should I say probably somewhat more bullish, we would need to see a nice move here above the 2742 in order to kind of consider a move back up here, maybe even a test of this upwards moving trend line, this short-term upwards moving trend line, a test from that from underneath. So, but like I said, for that we would need to see a nice move back above the 2742. Looking at the Dow Jones, and Dow Jones has closed just on the 200 EMA here. Certainly we can see that in the past this line kind of acted as a very strong area of support. Yesterday we managed to break it, and of course we can see that in the past we also during the day we managed to break this line, but then we always closed above it. So right now, of course, this is becoming a bit of a tricky one here, because we can see that it's just hanging here on the 200 EMA. I would probably at this point stay sharp, because even though we can see maybe a little slight close below this area, below this 200 EMA, we are balancing still on this this good area of support here, marked by the lows of the 29th of May, and that's around the 24,250. So keep a close eye on this one. Certainly if we do get a reversal bounce here back to the upside, so stay sharp. Keep a close eye on this little level right here at around 24,400. If we do get a nice break here above, this could open the path towards these previous higher levels, but for now I would probably stay I would stay more bearish than bullish on this one, just judging by this current picture. But like I said, anything can happen. Maybe it will just reverse straight up, and this would be a good wiping out of all the sellers who are trying to sell this index right now. So that's why I would probably, like I said, recommend to stay sharp here. We need to see a better confirmation here, maybe even actually a drop below yesterday's lows of around 24,100 approximately. There could actually indicate a further decline to the downside. So keep a close eye on this one. Very interesting developments happening here with the US equity markets, and we could potentially squeeze something out of it. Looking at the Europe and the FTSE 100 yesterday, well, talk about a selling day yesterday, and we managed to break out of this veg that I was talking about, and we broke it to the downside. Certainly at the moment this is looking quite bearish, to be honest. I mean, we're not far from this 200 EMA here, shown as the black line, and of course we're not far from this first level of support at around 74.90. Good level to watch. If we do get a reversal here from that level, we could see maybe a bit of a retracement going back up here, but overall probably we're going to remain more bearish than bullish on this one. Certainly continue monitoring it. Probably I need to adjust this level right here. This is going to be less important, and the more important level is going to be this one right here at around 75.45, or actually 75.50. I would probably round it up here. So good level to watch here. If we do get a nice break here to the upside, well, keep a close eye on these areas here, the 76.10 and above, of course. But for now, just judging by this current picture, it is looking more bearish than bullish, and we do have some good levels on the downside here. Looking at the DAX, and the DAX, well, following the footsteps of every other index and moving lower, we broke this key area that I was talking about, the 12,300. I was mentioning this area, potential area of support in my previous video, so we broke it nicely to the downside. We stayed below it. Certainly we could maybe see a bit of a retracement back to the upside. Maybe could see a test of the 12,450 again, but this could be classed as just a corrective move. For us to kind of become more bullish on this one, we would need to see a nice move back above the 12,600 level in order to kind of start considering these previous higher levels. But for now, again, like I said, this is looking quite bearish, and the next potential area of support that we're keeping an eye on is the 12,150. Good area to watch. Certainly it's not far from the psychological 12,000 level as well, so let's just put that one on the chart here. And 12,000, very good area to watch as well. But like I said before that, let's not get ahead of ourselves too much, and let's aim for the 12,150 first, of course, with the possibility of having a bit of a correction back to the upside. So keep a close eye on this one, guys. Could be an interesting one. Looking at gold, and gold continues to trade within this little range here between the 1270 and the 1261. Certainly for us to kind of start considering lower levels, we need to see a nice break here below the 1261 in order to kind of like aim maybe for this level right here, this upwards moving trend line that has been running here for quite a while now, since approximately around December time 2015. So good area of support, but only if we see a nice break here below the 1261. On the upside, well, a break above the 1270 area could be maybe seen as a bit of a slightly more bullish scenario, and we could maybe end up testing this trend line here, this slightly shorter term trend line that has been running since July last year. So we could end up testing that from above, from underneath, I do apologize, but like I said, only if we get a nice break here above the 1270 mark. So keep a close eye on this one. At the moment, probably gold is just preparing for bigger moves or something like that, so well, try not to miss it. Let's have a quick touch on a few pairs now. So the euro dollar continues to push higher. Certainly we saw this nice close above the 21 EMA yesterday, so which is acting as a bullish kind of indication here, and certainly yesterday met its resistance at around this level that I was talking about, the 117,250. Good level of resistance. If we continue breaking that to the upside today, well, I mean, start aiming for these levels right here at around 118,400, which currently coincides with this 50 EMA shown here as the red line. So good level to watch, but like I said, only if we get a nice break here above the 117,250. We can also do something like a draw here, a tentative downwards moving trend line here, which probably maybe some could use it, maybe, or could find it useful, let's say like that, and probably would say if we get a nice break here, not only above the 117,250, but also break above this one, then, well, this could lead towards definitely could lead, well, I shouldn't probably use the word definitely, but could potentially lead to higher levels. Let's put it that way. So for now, keep on watching this area, keep on watching the 117,250. Certainly on the downside, for us to kind of start considering maybe lower levels, we need to see a move back below the 116,500 in order to kind of consider maybe a touch of this upwards moving trend line again, that has been running for quite a while here, since approximately January 2017. So good area to watch as well, but only if we get a break below the 116,500. Let's quickly have a touch on a few pairs quickly before I run out of time. So GBP USD, certainly it's looking slightly worse than the euro dollar, but nevertheless still continues to drag itself higher, slowly climbing up here, still below this 21 EMA. Of course, probably for us, for now we're going to be quite neutral on this one. For us to kind of become more bullish, I would say we need to see a nice move here above the 133.40 in order to kind of start considering these higher levels here. Maybe the 134.70 could be a potential good area of resistance, but only if we get a nice break here above the 133.40. On the downside, certainly a break below the 132.05 could lead towards these lower levels. Certainly initially we could be testing these lows that we had here last week, or sorry, actually I should probably rephrase it, the 21st, yeah, actually last week, I do apologize, yep, I'm mixed up on the days now. So yeah, the lows that we had here, and then of course a further drop towards the 130.45 mark, approximately there. So keep a close eye on it. And one last pair that I really wanted to touch on is the USD JPY. Now USD JPY is currently testing, or should I say, it's breaking the this upwards moving trend line here that has been running here since around 26th of March, and certainly this is more of a bearish indication than a bullish, and we could end up moving here lower, maybe even towards this first area of support, the small little area of support at around 109,200, and then maybe a touch of this 109 mark. But if the rate continues to drop below these two levels, then well, it is opening the path towards this 108,100 marks, which kind of almost coincides here with this green line here, which is the 100 EMA. So good area to watch, good levels of support. Let's see if it happens, of course. But if this suddenly reverses back up here and moves above the 109,850 mark, approximately around there, it also could place the pair above the above this 21 EMA, which could lead to a test of this this black line here, which is the 200 EMA, and we could end up testing this this area right here. So for now, of course, it's looking more bearish than bullish, but always stay sharp. I mean, especially at these levels here, because you know, you probably are aware that the market sometimes likes to let's say to play a trick, to play some tricks on us, and yep, to reverse suddenly, you know, even though it's breaking something like that, and then yet reverse back to the upside. So for now, stay sharp, but just probably overall overall picture right now, it's more bearish than bullish. Okay guys, I'll have to wrap it up here. Thank you very much for watching and listening. I hope you found it useful, and if you want to join me later on at my Traders Tea Time at 13:15 GMT, 14:15 British Summer Time. For now, I hope you have a good European session, and bye bye.